Welcome, traders. Just wanted to do a quick trading recap of today's trade, following the same process as I have spoken in the past few videos. I have a close and breakout signal, which again is one of my favorite signals because of its simplicity. A close above the previous day's high or low. But more importantly, I get my signal, and the next day I get my setup. A peak formation high, peak formation low, a price level, a dump back into it. And within that 9:45 to 10 a.m. window, I'm just getting in. It's literally that simple. A dump and pump template. And just to zoom into this just a little bit more, just to look at a little bit more of the details, I'm going to highlight 9:45 because that's when we got our engulfment. That was my starter position. And in that 10 a.m. window, the engulfment above all of the EMAs, I'm adding positions and I'm holding to targets, which was the high of the day. Now, just to really break this down, because Monday's the opening range, peak formation low, peak formation high. Where are those peak formations at? This one's at 50. This one's at zeros. So that's my box. This is my strike zone for selling. This is my strike zone for buying. 75 was our median, which median price can be where you can get a continuation trade from. Funny enough, they did that. But from 50, our buy low level, our strike zone is where I would like to get filled. Now, if I can't get filled here, I'm getting as best as possible the next best fill, which can be Friday's close, the daily close, the next level, etc., etc. But this same exact process repeats. There was quite a few pairs that I was looking at on my watch list. Gold was also another one. But this market, unfortunately, left us behind. Peak formation low, peak formation high, peaks into the peak. I did take the nail and bail opportunity in the US session for a quarter. Traders are telling me, oh, this is messy. What's messy about 10 a.m., the high of the day, and price? See, it's messy if you're trying to read the price action. That's messy. I'm not looking to read the price action. I'm looking for the setup. I'm looking for the peaks into the peak formation. I'm waiting for the timing window, the levels, the EMA knot, the 99.1 knot. If you don't know what that is, look at this chart. That's the 99.1 knot. The EMAs are tightly coiled at a level for our explosion. Now, there wasn't much in the US session because they've already completed the pattern. If this happens, I may just be sitting on my hands. It's really not that big of a deal. But when I get my signal, any signal at that matter, I am just simply marking my peak formations. I am marking my price level where that peak formation is at. It's at 50. Now we don't get 50 for sales. We don't get 25 either the next day. But what we do get, which is even better, because we get our lower peak formation high, they lock this in, lower peak formation high, low of the day. We get our peak into the peak at zeros for a fill at zeros down to where that pump began for 75, 100 pips. This is free cash if you know what to look for. Now I get this question a lot. How do you know? How do you know? How do you know? When I'm live, I don't know anything. And I'm not trying to figure anything out either. I'm waiting for the market to show its hand. Repeat, I'm not looking to work to find trades. I'm waiting for the market to show its hand and reveal itself. Then I will strike, place my fill, place my stop loss, place my take profit, OCO. But once again, there are a plethora of different types of opportunities that the trader can be hunting. This is the euro dollar. Now, today was just a really good day for London. But wherever that peak formation is at, because this is the whole point of the video, where is the peak formation? Are they up? Are they down? If the peaks are up, I want to see them pump back into that peak formation. Now, that doesn't mean that they will even take it out, because you'll see some that take it out. You'll see some that respect the high bull, and you'll see some that only take out the high of the day, putting in a new peak formation and a fill at our grid levels. I want to get filled by the grid. I don't want to get filled by a gap, a sweep, a block, a hunt, a consequent encroachment, some science that doesn't even really matter or truly exist in these markets. I can go back on any chart, mark up my peak formations, my signal, I the pattern. It's the same. There's only one trade. There's only one pattern. Pump and dump and pump. Markets only do three things. They will break out, fail, and reverse. They will break out, pull back, and trend. Or that market is staying in a trading range. Now, this was after the release, but it was a really, really aesthetically pleasing chart. That is what I'm looking for. I'm looking for the clean charts. I'm looking for clean templates. I'm looking for the easy trade. Once again, a peak formation low, peak formation high, peaks into that peak. What separates a peak formation? The sessions, the days. They pump back into the peak formation high. They close below the EMA. I'm in and I'm out. And it's just that simple. And remember your higher time frame, because this is the most misunderstood part. I'm looking for signals. I'm not looking to read a market's direction, but just to give you guys some examples of the weekly template, the monthly template. This is the first day of the trading month, and we use that to indicate when the market actually breaks out. If a market closes in breakout, now this is fractal. This could be daily, 1 hour, 15 minute, 5 minute. You see this breakout? That's the breakout. You see this? That's the pullback. You see that? That's the failure to go lower. Or shall I say a double peak for the W formation for our continuation longer. Now remember, they close in breakout. That's a breakout. They can pull back and continue to trend, or they can break out and fail to reverse. But nonetheless, when you understand what a peak formation is, because what is a peak formation? A A top, a M, a head and shoulders. You'll see these peak formations everywhere. These peak formations give you our bias for our trade setups. Peak formation low, peak formation high. Which side are they working? They're working the top side. They gave a trap and shift, three higher closes, closing breakout, high of the week, high of the month, highest close, down closing day that closes in breakout and continues short, continues to hit the stops, but dumps back into the peak formation low for our continuation higher because this was our higher high, which is the recipe for the dump and pump template. But again, everything starts from the daily. The daily chart is easy to read when you know what to read. The breakout, the breakout, the breakout, the breakout, the breakout. Because markets only do three things. They break out, they pull back, and they trend. They break out, fail, and reverse. Or you'll see a market break out and go into a trading range, which then they'll start that process all over again. Breakout, pull back, continuation. But what are you looking for? Are you looking to sell high? Are you looking to buy low? Or are you looking to diddle in the middle? Now, again, the first day of the trading month lets us know if the market broke out or not for that month. And then I'm looking for either a breakout that continues or a breakout that fails. Because if this breakout is failing, guess what all these people are up here for that current time, their trap volume. But they stay above the breakout of the prior month and continue to trend. They break out. They break out, fail, and reverse peak formation. What do they do when they put in a peak formation? They'll stop hunt or pump back into that peak formation. This is your textbook first red day examples. A pump back into a peak formation. A pump back into a peak formation for a first red day close and our first red day set up the next day. First red day, first green day. Now there are many types of first red days. First red day close. Why is that a first red day close? Because longs are trapped. Simple. First red day is a long trap. First green day is a short trap or bear trap. But again, the markets only do three things, and this is a daily chart. They break out, they pull back. They break out, they pull back. They break out, they pull back. They break out and fail, giving us a double peak, triple peak. What is that? It's a head and shoulders. That's a breakout. That's a pullback. That's a continuation. That's a pullback. That's a continuation. Again, markets only do three things, three very simple things. If the peaks are up, as they are on gold, if the peaks are up, I'm short biased. They peak into the peak formation. That's our trade setup. That's the criteria. They peak into the peak formation. First red day. First red day. They peak into the peak formation. First red day. Closing breakout. Inside days, outside days, etc., etc. Breakout pullback. They peak into the peak formation. They peak into the peak formation. What are you looking for? Do you even know? Do you have a process? Is it rinse and repeat? Is it simple to follow? Is it simple to understand? Are your entries and exits simple to understand? Are you getting filled at the high or low of the day or at or around major round numbers? Are you using signal days to filter your watch list? What are you looking for? A pump and dump with the trend. So it can be a pump and dump with the downward trend. Or are you looking for a pump and dump that is a actual reversal because they can just close and break out. And then the next day, funny enough, peak formation low, peak formation high, breakdown, reversal. This is my favorite setup, but it can also set up like this, a dump and pump templates to continue the trend. What's the difference? The peaks are down. That's the difference. There's space back up. That's the difference. The reversal, the peaks will be up. And notice how I'm saying peaks, not singular, plural, peaks. The peaks will be up and there's space back down. That's the difference between a trend and a reversal. And there are so many traders that are still overcomplicating that. A market will break out and pull back. There'll be space back up for that trend. Or a market can break out and fail and reverse. So breakout, pull back trends. Notice they pull back and there's space all the way back up. Funny enough, you don't get that if it's a reversal. That doesn't happen. But 1% better each day, traders. It's only Tuesday. Tomorrow's day three. So what's the process? I'm looking for an opening range, potentially an initial balance that's set, and then maybe a day three setup. We could get a first red day template. We can get 3 days of breakout traders. The initial balance could have been Monday and Tuesday's high for an inside day on day two, and maybe even a short squeeze on day three to continue that trend. That happens. This is a template. The other was a template. Maybe it's day one, day two, day three for our monkey hammer. I don't know. What are you looking for? Will you wait for the market to show their hand, or are you trying to look to get paid? Because there is a complete difference between the two. But thanks again if you made it to the end of this video. There will be more breakdowns later this week. I'll be going over the daily chart in more depth and just explain how to master these basic fundamental concepts, about this market so that you'll be able to extract capital each and every week, each and every month from these markets, rinse and repeat, 90-10, not 50-50, 90-10, pump and dump templates or dump and pump templates. Thank you all and peace.